When we do have those ETFs, it's not only going to enable certain family offices and institutions to be able to buy Bitcoin immediately. It's just like buying a stock. They can settle it with their prime broker. It's no big deal. They have a custodian already. But that's one step. The second step is it's going to force an entire sector of investors that have been ignoring it. It's going to force them to look into it and understand it. And so having that understanding is really the next big step, which makes me tremendously bullish.
The atmosphere in the cryptocurrency and the entire digital asset space can be described as purely electrifying and filled with immense positive expectations. The entire industry is on tenterhooks, awaiting with a lot of excitement what 2024 has in store for us. If the past few months are any indication of what's to come, 2024 is really the year to look forward to for all participants in the cryptocurrency industry. Not only are we finally getting a spot Bitcoin ETF, which by all indications will cause a flood of new capital to come into the industry, but 2024 is also the year of the much-awaited Bitcoin halving. This periodic 4-year event halves the Bitcoin block reward, putting a strain on the asset's supply. The halving in itself is very bullish, but when coupled with the influx of new investors that control trillions of dollars, it does not take a genius to see how both events will be great for Bitcoin and other crypto asset prices during the next bull cycle. However, according to James Lavish, a renowned macro analyst and reformed hedge fund manager, the coming of institutional investors into the crypto space will be great for more than just prices. Lavish believes we are on the verge of great things that could and would completely push the entire crypto space into the mainstream. The renowned macro guru equates a spot Bitcoin exchange-traded fund, especially one from an influential firm like BlackRock, to a huge signboard that forces even the strongest critic to focus on the cryptocurrency industry and do their assignment on the asset class. We will now bring you clips from Lavish's latest interview with Blockworks Macro. Please watch, share, and like this video. Also ensure you subscribe to the channel, turn on post notifications, and don't forget to drop your comments and observations in the comments section below. Thanks, and enjoy the video.
Well, first of all, I do believe I'm with you. I believe I'm so bearish on the system that I'm bullish on Bitcoin. I'm hugely bullish on Bitcoin. I came to the party much later than most of you, and I also come from that institutional investing world, like Mark does. However, and that's part of the issue is that the people who have benefited the most from this system are not apt to look at Bitcoin as something that helps them because they don't need something else. Warren Buffett doesn't need or want anything else. Neither does Charlie Munger. Neither does Jamie Dimon. Like, they do not want this. Why? Because it is tremendously disruptive. Now, why doesn't somebody like Elizabeth Warren want it? Because she cannot control you with it. It is out of her purview of control. And that's a problem for her. So that goes back to your point of, okay, as this gains traction and as we see in the next 3 to 6 months, we have multiple Bitcoin spot ETFs approved, which enables many institutional investors, small offices, small family offices, and those who just have not been able to convince their investment committee that holding Bitcoin is something that is not a reputational or a career risk. They have not been able to get to it because of the internal controls on buying, on settling, on custodying, on pricing, on market, on Bitcoin. They just have not been able to get there. And so when we do have those ETFs, it's not only going to enable certain family offices and institutions to be able to buy Bitcoin immediately. It's just like buying a stock. They can settle it with their prime broker. It's no big deal. They have a custodian already. But that's one step. The second step is it's going to force an entire sector of investors that have been ignoring it. It's going to force them to look into it and understand it. And so having that understanding is really the next big step, which makes me tremendously bullish because there's no arguing that the fundamentals of Bitcoin it trumps even that digital gold narrative, which will be the first narrative. That's going to be the first narrative. I agree with Michael Saylor on this, that the first use case for most investors is going to be digital gold. Then we move into the we need to control this phase, right? So what are the options? Can they ban it? It can't be banned. I mean, you've seen what happened in China. They I don't know if they pretended to ban it. It's difficult to understand what their policies are with that regime, but China is still one of the biggest Bitcoin miners on the planet, if not the biggest. So I think we get into the spot here where people are a little bit worried about, but once we get the ETFs and it's widely owned, they can't ban it. I just can't see them working against BlackRock and Fidelity and, State Street and Texas Teachers and CalPERS. And like, that would be such a monumental move. I can't get there. They could tax it significantly in a way or something, but these ETFs, once they get approved, that's like a stamp of approval that I believe will put this into the mainstream, and that's it. The cat's out of the bag.
During the interview with Blockworks, the focus shifts from Bitcoin to more gloomy news, the very disappointing state of the economy of the United States. One of the predominant themes of Lavish's work on macroeconomic conditions in the United States is the U.S. debt spiral. According to the popular analyst, the United States is caught in a vicious cycle of money printing, currency debasement, economic challenges, and more money printing and currency debasement. Lavish believes that the United States has successfully buried itself under its massive load of debts, with only one viable solution: to sink deeper in debt as expenses continue to increase and revenue takes a nosedive. No politician would ever consider an austerity program, which would mean cutting back on mandatory expenses like Social Security, long-term defense spending contracts, and Medicare. In this same vein, they can't raise taxes enough to cover the crater-like deficit hole. The only solution is to keep piling up the debts, reshaping the economy into a bigger nightmare for investors. This means economic challenges like rapid inflation, periodic economic downturns, and other economic challenges will always be a part of the American story, at least until everything completely unravels. The most unsettling part is that a huge part of the burden falls on the working class, people who are ever struggling to make ends meet. Let's get back to the interview.
So if you can pay for your food and energy and, your housing, okay, then you can survive and you can have a somewhat comfortable quality of life. However, when prices rise so much and you're at the low end of that earnings curve and all asset prices rise, well, that the multiplier effect on those larger things, so anything that's not a necessity ends up being out of your reach. So your quality of life is likely to diminish. So because you're not going to be able to keep up on that any of the larger purchases. You need a new washing machine. You want that new TV. Not that that's necessary, but maybe that would raise your quality of life, or maybe you want a better bed. That would raise your quality of life. But have you seen the prices of beds? So like things like it. I just don't think they're keeping up in that sense. Number one. Number two, when you have these cycles, and this is the problem. This is what maddens me. Is that when you have the manipulation of money and you're going in these cycles, you continuously go in these, ebbs and flows of the economy. And then you get into one of these downturns. Well, who gets hurt? Who gets hurt the most in that downturn? Who loses their job, right? You're going to have a little bit of a barbell, but typically, you're having a swath of wage earners that are not critical to a company that get laid off. And so all those layoffs and that recession winds up just doling out economic pain across the board. The people who lose are also the ones who are their wages, their real wages are not really keeping up. And so who is that? And it's the ones who don't have any assets and they don't have any debt. So they're not benefiting from those paying back cheaper dollars. but also they're being hurt by this hidden inflation that you cannot tell me that the price of goods and services over the last couple of years are only up 12% or something, not even. So the CPI numbers they're absolutely being manipulated for a good purpose. If you're at the Fed and the Treasury, so the issue is, are those metrics true? Are the low wage earners really keeping up? Are those real wages really keeping up with inflation? Because if you look at, if you ask anybody at the lower end of that echelon, then you're likely to get the answer that is no. And the other thing is, how many jobs do they have to work to keep up with that inflation? Go back to what you were saying about the confidence in the dollar. So the issue is that, well, the Fed they're supposed to have they're supposed to make sure they oversee stable pricing, right? So they want to make sure that we have stable pricing in the system. What does that mean? That we don't have inflation that runs out of control or deflation that runs out of control. You want stable pricing. And they want full employment. That's supposedly their two mandates. In reality, why do they go to first principles? Why do we need stable prices? Because we need confidence in the dollar. Okay, now who are they answering to? Well, they're answering to the Treasury, because the Treasury needs a stable dollar. Why? Because they need confidence in the dollar. Why? Because they need to keep borrowing. They need to keep issuing debt. They need to be sure that they have that avenue to facilitate all the spending that's going on in Washington.
Unlike other, more traditional Bitcoin enthusiasts, Lavish is neither predicting the immediate end of the United States economy nor ignoring the need for other assets, especially to take care of financial transactions in the short term. However, like every other Bitcoin investor, Lavish believes that the leading crypto asset will be the top survivor and eventual winner after everything unravels. During the interview, the former hedge fund manager also discussed the easiest way to orange pill people who are not completely aware of the precarious situation of the U.S. economy. The U.S. economy is dangerously over-leveraged, there's a lot of uncertainty in the markets, and it's only going to get worse over time. In one of his Substack posts, Lavish analyzed a report from the Congressional Budget Office, CBO, detailing its federal budget projections for the next 10 years. In addition to gloomy predictions like inflation remaining above the targeted 2% until 2026 and an increase in the unemployment rate, the CBO expects a 47% increase in revenue and a 60% rise in expenses over the next 10 years. According to Lavish, the 47% increase in revenue is extremely optimistic, as the CBO does not account for any recessions ever. Lavish expects a recession to hit sometime this year and continue into next year, slowing down growth and further impacting the CBO's 47% revenue growth projections. To borrow from Lavish's apt conclusion, the Treasury's debt temperature this year and for the foreseeable future is hot. Like Inferno hot, the kind that leads to an eventual breakdown. What are your thoughts on James Lavish's apt analysis of the current economic situation in the United States? What are you doing to protect yourself from the storm that is about to hit? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel and turn on the notifications bell so you never miss any of our future uploads. Thanks for watching.